Hello, my name is Roger Lemaitre. I'm the President and CEO of UEX Corporation, and it's my pleasure to provide you with this brief introduction into UEX Corporation, our exceptional Athabasca uranium portfolio, and how we lead the discovery of cobalt in Canada. We will, during this presentation, be making forward-looking statements, so please keep that in mind, both if you're in Canada or in the United States. And if you have any more information, please look through this in a little more detail. Thank you. Instead of turning this around and saying, what about UEX? I think I'd like to turn this around a little bit more and say, okay, what about a uranium investor? What should you be focusing on? And as an investor, you have the opportunity to look at a range of opportunities from physical uranium right through to grassroots exploration, as you see here on this list. And depending on your risk tolerance, you can move farther down the ladder with potentially higher risk, but also higher rewards. But for UEX, we focus our efforts in these three areas: the developers through to new discovery companies. And I think the key reason why is, while we do have development-ready projects and a substantial resource base behind us, I think where we provide in today's market investors with the best possible return is with that focus on growing our existing resources and new discoveries. And being a potential for new discoveries is really important because, quite frankly, new discovery companies always outperform the development production companies. But the trick is picking the right new discovery company, because of course not every company is going to make a new discovery. But you can see here that whether it's the swinging upward cycle we saw in the early mid-2000s, where UEX did extraordinarily well compared to Paladin on a relative basis, whether it's Hathor in and around the Fukushima event in a relatively flat market, vastly outperforming a development company like Paladin, or more recently NextGen in this current cycle, part of the cycle, vastly outperforming Cameco. If you can pick the right discovery company, you will do better than the performer or the developers and the producers. But the trick is how to pick that new discovery company. And that's where we come into play. We're probably, in my opinion, of course, the lower risk growth option. We have a large strategic portfolio in the Athabasca Basin. Of course, the Athabasca is the premier place for junior explorers and developers to be working, and anyone can own a large amount of land. I think what makes us unique is that since we were around in 2001, before the last cycle, we picked up a large portfolio, but also a strategic and very well-positioned portfolio. We're not, anyone can start a new company tomorrow and call themselves, by the end of the day, the largest landholder in the Athabasca Basin. Are you in the shallow portions of the basin? Are you around substantial deposits? UEX checks those boxes easily. We're underpinned by just a hair under 100 million pounds of resources in 10 uranium deposits that we have ownership in. That's one of the largest resources of all, and the best part for investors is that creates a floor upon which the value of our stock is sort of underpinned by that resource value. And we'll move up and down with the price of uranium just like any other developer or producer, but we have that substantial mid-stage and resource growth upside potential. We have near development potential. We'll move that forward when the time is right, but we have lower risk properties with multiple targets that have hot holes on them that have never been followed up, or all of the stuff you want to see around deposits like alteration and structure that would be a step up for a lot of our smaller peers. We also expose our investors to a unique type of discovery that's been found by us and pioneered by us in the basin with respect to unconformity nickel cobalt deposits. We sort of corner the market in that area in terms of knowledge and skill. Compared to our peers, we have a compelling value and re-rating potential, and our team has found things that have been put into mines in the Athabasca Basin. So a little bit about us. February 4th here, we're trading at 32 cents. There's been some volatility since then. Our shareholder is still Cameco. We're well financed with just a little under $7 million in the bank, and our trading volume has been pretty exceptional. So as an investor, you have to think about, why do you want to get into the uranium space? Well, uranium supply, in terms of forecast, we're only producing about 2/3 of what the world's demand is, and demand is growing with 53 reactors under construction today. That's not talking about reactors, that's shovels in the ground, concrete being poured. We see COVID interruptions taking what was thought to be a 2-year away supply shortfall and pretty much accelerating that to the present day. We see changes in the last 18 months, and particularly accelerated since the Biden administration came in, on recognizing the importance of nuclear power to clean air energy, and that's been a growing sort of process over the last couple of years. But I think more than anything else, it's just the realization that nobody in this space is really making any money. Even the cheapest cost producers aren't making money. So this middle graph here is uranium mine cash cost curve. So that's actual cash out of pocket. That doesn't include capital recovery, sustaining capital, the cost of capital, depreciation, amortization. So the actual true cost is going to be higher than this. And if you look at the roughly the current spot price right here, you can see that there's under 90 million pounds in 2019 under the current spot price for cash costs. The rule of thumb in ISR projects like you see in Kazakhstan and Australia at Beverly is that sustaining capital, or drilling the new wells, is about equal to cash operating costs. So you start to sit there and say, okay, let's double everything that's under this curve, and there's not a whole lot of margin there, and no one's recovering their capital today. This year, we're seeing 2 of the world's largest 10 mines come off stream at Ranger and Cominac, and that actually slides the cost curve to under 83 million pounds. So, less than 50% of the world's supply is at cash operating cost is making money at today's prices. And if you add capital and operating costs, that drops precipitously low. And how can every producer in the world afford to lose money forever? Unless there's a movement in the uranium price, we're going to see a substantial impact on the global nuclear power fleet, which produces over 10% of the world's power, 20% in the United States. What we are seeing today in the space is a little tug of war going on between suppliers and utilities, where utilities are trying to hold off as long as they can before they get into the market and start to buy. But that is changing rapidly. So if you like uranium, you like the supply-demand fundamentals, our competitive advantage is location. We're focused completely in the Athabasca Basin, which is the best place for junior explorers to work. Our experience, we've found things that have been turned into mines. We have a vast portfolio of land that spans from grassroots to development-ready projects in strategic and shallow portions of the basin. And we not only know a lot about our cobalt and nickel deposits, but we are also one of the top basement-hosted explorers in the Athabasca Basin. Our team has over 275 million pounds worth of discoveries under our belt in 7 uranium deposits. One of those deposits has been mined or being mined. 2 of them are in the development plans of an existing mine, and one that will be developed into a mine. So there's 3 of those that are in the economic range. We have a cobalt discovery at West Bear, which is the first of a kind, never found in the world, and we have unique knowledge of how to do that. This small team, while we don't have a tremendous amount of years of experience, have found uranium deposits on multiple continents, not just the Athabasca Basin, and they know how to find things. They have a real nose for it. Our team at the management and board level has been there and done that for many years. Graham Thody, our chair, has been around since the company's inception, brings tremendous knowledge about not just the company's history, but the uranium markets and the junior markets in general. Catherine and Peter, our newest board members over the last couple of years, bring a different, unique view of uranium, of markets, not just uranium markets. Shiraz Ahuja has been around uranium business since its inception in the Athabasca Basin, and Emmett McGrath brings financial experience and governance extraordinaire. Evelyn, our CFO, has been in the junior space for the last 13 years and been involved just with everything you can imagine. I myself have been in the mining business for 30 years, both in juniors and majors. In the last 20 in uranium, I managed Chemicals Global Exploration Projects team for a period of time and been involved in discoveries. All the boxes you want to see for uranium junior, checked off. But most important for you is, what do we bring to you from an investment point of view? So like I said previously, if you're in uranium investing, you have a choice along that ladder. And this ladder is the same ladder here, run sideways instead of up and down. Generally speaking, in today, you have a choice of investing in a development or production company or a grassroots exploration company. And there's very little space in the middle. And they tend to be one-off opportunities. So one project. We have just a hair under 300,000 hectares of land, 19 projects, 10 uranium deposits, a vast resource base underpins the company. And we have a portfolio of opportunities that spans across from grassroots to development exploration projects. Where we shine the most and what we bring unique to the space is a mid-stage and resource level portfolio, unlike any of our peers. This mid-stage and resource level portfolio are opportunities like you see at Hidden Bay and Christie Lake, where we have existing resources that we haven't yet followed and tested the rest of the trend, or at Hidden Bay where we have hot drill holes with mineralization, or the geological indicators that you're proximal to something that has not yet been followed into a discovery, or of course even followed through into the basement. So UEX, what that does is having a mid-stage and resource level project portfolio means that you have less risk of being involved in that next new discovery because you're looking out to follow up that hot hole. Our 2021 exploration program is focused conclusively on those mid-stage resource level projects to grow resources in our portfolio. While we have projects at Horseshoe and Shade Creek that are ready to move forward to development, we don't believe that the price of uranium today is signaling a need for more pounds right now. So instead of trying to push those projects forward to development, which have costs that we figure are very much in line with what you see around the rest of the Athabasca Basin, we'll focus on growing our resources and provide our investors with that new growth opportunity. So our focus in the short term, all about growing the resource space through our discoveries at Hidden Bay, West Bear, and Christie Lake. Growing resources at our Shade Creek project, which we think has not yet been fully defined, and extracting value for our shareholders from our cobalt nickel assets. In the long term, we'll move forward with Horseshoe and Raven when the market signals a need for more uranium, and we'll evaluate timely acquisition for uranium and cobalt projects in favorable, low-cost jurisdictions. So just a little bit about our projects. I'll go through them very quickly. Right now we're working on our Hidden Bay project. It's the eastern Athabasca Basin. We border up to two world-class mining operations, the Eagle Point Rabbit Lake operation of Cameco and the McLean Lake operation of Orano. The property here, edge of the basin, extensively explored for the last 40 years for classic Cigar Lake style uranium deposits at the unconformity. But we think this gives us an edge because we have 200 kilometers worth of corridors where we can see that the basement exploration potential hasn't even been tapped yet. We got power lines and roads transecting the property, and the Arrow, Eagle Point, Triple R, Rough Rider style deposits have yet to be explored. Yet, the historical work here gives us a library of opportunities to say, there's some smoke here, we need to follow it into those basement environments. And this year we'll be looking at our Dwyer Lake and nickel uranium sands target areas. But how many juniors expose you to two on-strike extensions of mineral systems on world-class deposits? So on the right-hand side here you can see the McLean Lake operation of Orano, where the Sioux E-pit comes right to the property boundary. On our side of the property boundary, we've done some exploration, and we found sniffs of mineralization that will need to be followed up and chased into, hopefully into deposits. And this winter, we'll be looking downstrand, for the Rabbit Lake deposit, where we have the nickel uranium sands area, which is a old school style exploration technique, looking for a new style type basement deposit. So the nickel uranium sands is a series of boulders that have uranium and nickel in it that are thought to have been scraped off an outcropping deposit during the glacial period and deposited in the soil profile down ice. The up ice direction in this area hasn't been tested, but we do know from some of the overburdened soil work done here that there's alteration in the very tip of the bedrock below at the bottom of the soil profile that is yet to be followed up on. And we think using the same style of work that was done to find the Collins Bay and AAB zones at nearby Eagle Point deposit, the Key Lake deposits, the south end of the basin, the Clough Lake deposits around its predecessor's mine, and Triple R are all successful discoveries made by chasing these boulders back in the up ice direction. So we're pretty excited because just a couple kilometers up ice of the nickel uranium sands, we have all the things we need to see for a discovery, and we'll be focusing on that this year. At Christie Lake, we are right next door and along strike of the McArthur River deposit. We're the only junior positioned land package between Cigar Lake and McArthur River, the two world's largest and highest grade uranium mines. And on that property at Christie Lake, we have 3 deposits and counting. We know we don't quite have enough resources yet to be able to move this forward economically, but we're only focused on maybe 5% of the entire property. And the main trends, going even back to the McArthur River mine, which you can see in the distance, have yet to be tested. So this summer, we'll be looking at following up our very strong geochemical and alteration structure that we found last year at Aurora North, looking along the trend of the existing deposits. And we'll be looking back along trend towards the McArthur River property boundary in our A trend and B trend areas as well. At Shea Creek is one of the largest undeveloped uranium projects in the Athabasca Basin, the first of the west side discoveries. And right now we have 4 deposits and counting with over 95 million pounds of resources. So people go, oh, Shea Creek, yeah, I've heard of that. It's a pretty substantial deposit. You can see here from this chart. The size of the area of the bubbles is the size of the resource there, and you can see that Shea Creek is one of the largest resources on, in similar grades to what you see around the rest of the Athabasca Basin. But we believe that because we haven't been looking at the basement-hosted target potential as we see within the existing Shea Creek deposit at Kiena, we have the opportunity to grow this deposit with a modest investment in exploration. So, like I said, we have just a little over 95 million pounds of resources and counting at Shea Creek, and the vast majority of those resources, as you can see here in the chart on the table here, come from the Kiena deposit. The bulk of the Kiena deposit is actually located in the basement, in fractures and east-west cutting fault structures in the basement. And that target, as you can see from here, in the light blue areas, is relatively small compared to the red areas, which are the classic Cigar Lake style unconformity deposits. But where there's been drilling at depth below the unconformity, we see the blue Kiena style mineralization. We've identified 10 areas across the entire strike length of the 4 deposits that show indications, not even show indications, we've seen these east-west fault structures that come across almost the same direction you're looking into the page here, that intersect the main trend. We've seen mineralization and alteration. We're not hoping to see it. We see 10 spots where this has not yet been followed up. And we only need to find one more Kiena-style target to turn this into the second largest undeveloped deposit in the Athabasca Basin. So we're pretty optimistic that a little bit more exploration looking for targets like Kiena can grow this resource substantially. And we're working with our partner, Arano, who owns the 51%, just a little over majority percent, to get this project up and running and looking at all the potential options to make that happen. Our Horseshoe Raven deposit is in the eastern Athabasca Basin. We literally have a road crossing over the 2 deposits and a power line that cuts across the east end of one of the deposits. Infrastructure is probably one of the coolest parts about this particular property. While it's not, it's got a 37 million pound resource, and it's actually low grade by comparison to the rest of the Athabasca Basin. This is a blessing to us because this allows us to use conventional mining techniques and without needing the special freezing techniques and the water risks that you see in some of the Athabasca deposits. It can be conventionally mined using cut and fill. We've looked at tank leaching for the toll milling on one of the 2 nearby mills, but also looking at the heap leach potential here. And we see if you plunk this deposit down anywhere else in the basin or anywhere else in the world, you would say, wow, what a great deposit. And it might even be mined. But because it doesn't have the sexy grades that you see as the rest of the Athabasca Basin, well, people don't get too excited about it. However, this is still higher grade than the average around the rest of the world. But with lower cost on a per unit basis, this is competitive with anything. We will move this project forward when the market signals a need for more uranium. Right now, we'll continue to poke away at little studies here and there to help us improve our understanding. And then finally, we'll talk about our West Bear Cobalt and Uranium project. We have the only primary cobalt deposit in Canada, and it's a new style deposit that's never been found before that we went and discovered last couple of years. We have the unique knowledge about how to find the next one, and we've identified areas on our existing properties where this target has yet to be investigated. It's not large enough yet to turn into a deposit, but we think another similar sized deposit, a satellite to West Bear, would put us in that interesting spot to be looking at opportunities with to feed the EV market. What we are looking for at West Bear is in the east-western corner of what's called the West Bear Dome, which the favorable rocks are outlined in red, and we've yet to test along those around that 25-kilometer sort of radius or circumference around the West Bear Dome. We've tested one area in yellow there last year and got some favorable indications. We're working right now at Michael Lake, and we're moving over to Huggins Lake later this winter to look for uranium, and then if sometimes uranium might lead us towards cobalt opportunities in the West Bear Dome. And we'll be looking, our plan here has always been to take this cobalt asset and find value for our existing shareholders. And we've been evaluating opportunities for that. With the cobalt market moving in a positive direction, more opportunities are starting to come to us. So once again, UEX creates a unique uranium investment opportunity. Our focus isn't on hoping to find something on a grassroots project or pushing the development project at all costs. It's growing our resource space in those mid-stage opportunities, resource-driven level opportunities that no other company really provides investors with today. And of course, new discoveries are more always drive market sentiment for uranium equities stronger than the development production portfolio companies, and that's what you get exposed to with UEX. But with less risk because we have pounds in the ground that can be moved forward in development. Compared to our peers, you can look at on the left-hand side of the chart here with other developers globally, other developers in the Athabasca Basin, or other producers outside the Athabasca Basin. UEX has a fair bit of room to make up peer value, so I think it's an interesting opportunity for an investor to get in at a much lower level than some of these other opportunities. So thank you once again for your time to go through our presentation, find out a little more about our company. If you do have any questions, please reach out to us. Our email address is uexcorp.com, or you can call us at 306-979-3849. We'll be happy to answer any questions you might have. And once again, thank you very much.